Hi, I'm Shashank Bhargav, and you're listening to Three Things, the Indian Express news show. In today's episode, we talk about RBI's latest decision that came as a shock to many and a problem that it is likely worried about. We also talk about a gang rape victim that was set ablaze. But first, we talk about the Citizenship Bill, which was cleared by the Union Cabinet on Wednesday. The bill aims to grant Indian citizenship to non Muslim illegal immigrants from Bangladesh, Pakistan, and Afghanistan. The bill was first brought in 2016. Last time it had passed in the Lok Sabha, but later lapsed in the Rajya Sabha as the 16th Lok Sabha tenure got over. Now, the bill is set for reintroduction in the parliament for passage, but with some major changes. Deeptiman Tiwary, who reports on government agencies, joins us to talk about it.
See, from the bill that lapsed in the last Lok Sabha, because it could not be passed in Rajya Sabha, was only limited to granting citizenship to illegal immigrants who had come from Afghanistan, Pakistan, and Bangladesh and belonged to communities such as Hindus, Sikhs, Jains, Buddhists, Parsis, and Christians. It specifically excluded Muslims. So, in that sense, the bill has remained the same. But what it has done this time is it has given some massive exemptions to the states in the Northeast where this bill had created a lot of political agitation. The last time it was introduced, in fact, in Assam, BJP's ally had said that it would break off alliance if this bill was passed. So, because there are concerns of the ethno-cultural sanctity of the region being disturbed by this bill, and a change in demography is another matter of concern in the region. So BJP had faced a lot of opposition in these states where almost all the states it has a government. So to stave off that political issue that it was facing with its own allies in the Northeast, what it has done in the new bill is it has excluded a majority of the regions in the Northeast from the ambit of the bill. The new bill says that all the states where inner line permit regime is applicable. In Northeast, there are certain states which have inner line permit regime where you have to take permission of the state to enter the state territory. So this regime is currently in effect in Arunachal Pradesh, Nagaland, and Mizoram. So the bill says that states where ILP is applicable, those states will be exempted from Citizenship Amendment Bill. So Arunachal Pradesh, Nagaland, and Mizoram are out of the bill. Then it has said that such tribal areas which come under the sixth schedule of the constitution in the Northeast will also be exempted. This would mean that almost entire Meghalaya, about 25% of Assam, and a large part of Tripura would also be exempted from the ambit of the bill, the new proposed law, because these tribal areas have autonomous councils and they have autonomy to govern themselves. So all of these areas, which means almost, you could say, 75% of Northeast is out of ambit of the bill. Another thing that the government has added in the new bill is with regard to overseas citizens of India cancellation of registration. This is the only new provision which has been added, is that an OCI card will not be cancelled until the person who holds the card is given a fair hearing. So these are largely the two major points which have been brought into the new bill. Another thing that has been done is a cutoff date has been mentioned specifically in the bill, which is December 31, 2014, which means that anyone who has entered India and belongs to the communities as mentioned in the bill from Pakistan, Afghanistan, and Bangladesh before December 31, 2014 will be eligible to apply for Indian citizenship.
Last time when the bill was being introduced and it even passed the Lok Sabha, we saw that the bill faced a lot of criticism from the opposition parties. Do we suspect the same kind of criticism of the bill this time?
in 2016, when the bill was first introduced, it was sent to a joint parliamentary committee. The Joint Parliamentary Committee submitted its report in January 2019, following which the bill was passed in Lok Sabha and then lapsed in Rajya Sabha. In the Joint Parliamentary Committee report itself, there was stiff opposition from the Congress, Left, TMC, and BJP. While some had argued that the bill itself was unconstitutional and was against the secular ethos of Indian democracy, parties such as TMC and BJD had argued that it would fundamentally change the demography of the northeastern states. This time, it appears that BJD has fairly softened its stance and it is likely to support the bill in Rajya Sabha. TMC has as yet not made any statement, so it has maintained an absolute silence on the bill. There are also indications that parties such as TRS, YSRCP may also support the bill. So it appears as of now that a lot of parties are either going to stay neutral or, barring Congress and Left, it appears as of now that a lot of regional parties are either going to stay neutral or going to support the government's bill. Some of the national parties have opposed the bill on the ground that it specifically excludes Muslims, and the argument of religious persecution does not wash up because religious persecution is also faced by several sects among Muslims, such as the Ahmadiyya sect in Pakistan has been facing religious persecution. So why shouldn't they be allowed? Similarly, why shouldn't it be extended to Rohingyas in Myanmar, who are also facing religious persecution? These are some of the issues which national parties have picked up and said, according to that this is basically an ideological project of the BJP, and it's a bill which is communal in nature.
Next, we talk about the RBI. Yesterday, the Reserve Bank of India's Monetary Policy Committee surprised many observers of the Indian economy by announcing that it would not cut the repo rate. In this segment, Udit Misra, who writes on the economy for the Indian Express, joins us to talk about the decision and a problem that the RBI might be worried about. Though before we begin, here's a quick explainer about what the repo rate is. Repo rate is basically the rate at which the RBI lends to the banks. If the rate is low, it means that banks can borrow more money and therefore lend more money. And this puts more money into the economy. People can spend more and companies can invest more, which essentially gives economic growth a push. Conversely, if the repo rate were to be increased, it would restrict the amount of money going into the economy, making people spend less. In a scenario where the inflation is high, that is when the RBI would want to increase the repo rate. Udit, the RBI's Monetary Policy Committee for the last 5 times had cut the repo rate. The idea was that it was trying to impact the economic slowdown. And now the RBI's decision to not cut it has come as a surprise to a lot of people. Could you talk a bit about that? What about it has come as a surprise? And if there has been no change in the economic slowdown, then why hasn't the RBI continued to cut the repo rate?
Right. So, yes, it's been a surprise, even a shock to many. A lot of people are stunned. They don't know how to react to it, primarily because most surveys in the market suggested that people expected, the economists and bankers all expected RBI to cut the repo rate by 25 basis points. Many actually wanted 50 basis point cuts because, as you know, the economic growth has been faltering. There's been 6 quarters now that the growth has been decelerating. Last quarter, GDP data was a new record low in the 6-year thing. And it was sort of very obvious to many that RBI, which has cut in the last 5 policies this year, would continue on that path and, in fact, cut even more aggressively than in the past, considering that now you realize that the situation is just getting more intensified, the slowdown is getting more intensified. And RBI, as you also mentioned, that RBI by law is mandated to essentially look after the retail inflation to be kept at 4% with a band of plus minus 2 percentage points. But RBI had been, after Shaktikanta Das took over, thinking more in terms of balancing both the goals of not just maintaining retail inflation within a certain bound, but also boosting growth, because by the time Governor Das took over, growth concerns were piling up. So from all perspectives, this was a surprising decision. Why RBI still did it? If you were to listen to RBI, they say that they are concerned about inflation. Inflation, after being benign for a very long time, by benign I would mean less than 4%, then has shot up in the last few months. And in October, it came to a 16-month high at 4.62%. And this is not just above the RBI's rate or comfort rate of 4%, but most projections show that inflation will remain higher than 4% for the end of the current financial year, that means the coming 3 to 6 months. But RBI is obviously concerned about that. And it's concerned that if it was to cut interest rates now, would it fuel inflation? That's the argument it has given. And it has said that we have already cut interest rates by 135 basis points. And the transmission hasn't happened.
The banks basically haven't transferred those rate cuts to the customers.
In fact, data would show that for new loans, the cuts that have been shared are only 44 basis points. For some of the older existing loans, actually the rates have gone up, because banks had to look at their viability. So RBI's argument is that, listen, we've already cut 135 basis points. We should give time for this transmission to actually take effect. And this is perhaps a right time to take a pause. And they've said that we'll remain accommodative, which means we will be ready to cut if the need arises. So that's been the argument from their perspective.
Okay, so then is it just RBI being cautionary about a possible rise in inflation? Because the logic then would be to increase the repo rate.
Yes, one would think that under normal circumstances, if RBI's projections of 5% retail inflation are there and inflation expectations from what the RBI surveys show, that people expect the inflation rates to go up by 120 basis points and 180 basis points in the coming 3 months to 12 months, one would expect that RBI in normal circumstances would simply raise rates. That is not happening, again, because of the fact that the other problem of growth is very, very apparent. It's very clear that that's the main problem that the economy is bothered with. If growth doesn't pick up, many other issues will seem very puny in front of a more intensified slowdown. I think an aspect that has not yet been stated in the policy or in general discussion is what RBI expects or worries government's fiscal deficit might be. See, at the end of the year, if this current trend carries on, government revenues are already struggling. There are talks that the central government may not be able to even pay what it owes to state governments. So that is the level at which the government revenues are under stress. And that at one level is understandable because the economy is slowing down. Now, already there is some concern about the validity of what government says its fiscal deficit is. A lot of people believe that that fiscal deficit number is understated. Actually, it's more. RBI might be bothered that at the current rate, government might end up borrowing more to pay for its activities, all the promises it has already made. And if it does that, then that will essentially be inflationary in a way, because government will take up all the money that is there in the market and that will push up the prices. So RBI doesn't want perhaps to be behind the curve if that happens, if that scenario happens. That's why they've said that we look to the budget. And so budget would be a big marker now for RBI and for others to figure out how RBI will do. I think if government maintains its fiscal balances in shape, RBI would be more likely to cut and again go back to a growth boosting agenda instead of just waiting and watching.
So what options is RBI left with? On one hand, it doesn't want the government to borrow more. On the other hand, you have the economic slowdown. And on the other hand, you have the threat of inflation.
So it's a particularly tough time, no doubt, because typically both the variables, inflation and growth, tend to go in one direction. If growth decelerates, typically inflation would also decelerate, because growth decelerating would mean that fewer people are demanding fewer goods, and so there's not so much pressure on prices. And on the other hand, if growth is raging, then possibly the prices would also be rising. And so it's easy for RBI to figure out what to do. Here, a very different thing is happening. And essentially because of some short-term weather phenomena and unseen circumstances where agriculture prices, output prices, have actually made inflation go up at a time when otherwise the demand is falling. So it's a tough spot for RBI to be in. And really it depends on different people finding different justifications. As RBI has said that, we've already cut 135 basis points. The transmission is not happening. There's excess liquidity in the system. It's not as if money is not there. If somebody wants a loan, they can get it, but nobody is picking up loan. So what is the point of cutting the interest rate? There's also a matter of policy space. There's only so far you can cut. After a while, that lever will be overextended. Now, there's nothing much you can do. So you also want to keep some powder dry for the next stage. That is one way to look at it. The other would be to say that, listen, growth is going really bad. This is getting more intense. And it's best to do everything possible right now that you can to boost growth. So don't just wait for what the government has to do. Do whatever is in your power to do. Especially if you look at RBI's own projections, it says inflation will come back to 4% in the first quarter of next year. So the argument would be that if you already know that inflation, or if you're reasonably sure that inflation will be back on track and these are transient factors, please cut and boost the growth. So it really depends on your approach to how you see the situation. I personally feel that the trouble in the economy is, again, consumer demand not being there. So to some extent, yes, RBI's cut will help. But I think the answer has to come from cuts in GST. I'm not saying income tax, because income tax is paid by a smaller section of this population. GST cuts might have a much more salutary effect on the overall demand. They might want to buy more.
And last, we talk about an incident that took place in the early hours of Thursday. A 23-year-old gang rape victim was set on fire, allegedly by 5 men in the Unnao district of Uttar Pradesh. According to sources, the woman suffered more than 70% burns and has been referred to a hospital in Lucknow. The victim has named 5 persons, and senior police officials said that all 5 of them have been arrested. In her FIR registered in March this year, the victim accused 5 men of sexually assaulting her on several occasions in 2018. In a complaint, the victim accused one of the men of taking her to Raebareli and sexually assaulting her on the pretext of marriage. After she pressured him into getting married, she alleged that the accused took her to the fields and, along with his associate, raped her on gunpoint. Taking action on the matter, Chief Minister Yogi Adityanath directed Divisional Commissioner and Inspector General to inspect the place of incident and submit the report by the evening. Meanwhile, DCW Chief Swati Maliwal retorted sharply to the incident and asked Yogi Adityanath to ensure death penalty to the 5 accused. In a letter to Adityanath, she said that within 30 days, the accused should be awarded death penalty and demanded that the survivor should be provided the best possible medical treatment. You were listening to 3 Things by the Indian Express. Today's show, as always, was edited and mixed by our producer, Joshua Thomas. If you like the show, then do subscribe to us wherever you get your podcasts. You can also recommend the show to someone you think will like it. Share it with a friend or someone in your family. It's the best way for people to get to know about us. You can also tweet us at Express Audio and write to us at podcasts@indianexpress.com.